I appreciate it. Thank you very much, Clement. And I'll try out a little bit of Bulgarian. Leka večer na всички. Is that right? So good evening to everybody. That will be the extent of my Bulgarian. So hopefully you'll be able to follow to some degree my English. As you can perhaps hear, and I'll briefly introduce myself. Who am I? My name is John Hardi. I have been with SAXO for 22 years. About 20 of those years were as the head of FX strategy, so currencies. And I really like the currency market as something to follow because of the need to have the very big picture and the need to follow basically all markets around the world and how everything compares to everything else. My educational background began as a historian as well, and I've been following U.S. elections since I was 8 years old, watching, and don't do the calculations on how old that makes me, but when I was 8 years old, watching Jimmy Carter lose on election night to Ronald Reagan in 1980. I think with the last couple of election cycles, we've seen the very interesting developments. Obviously, on actual election night, and sometimes the big reaction to the election, required that we wait much longer. So let's recall in 2016 that we really got a shocker quite early on in election night when it was very clear that Trump was outperforming in some key states, and you were essentially able to make a call. It was quite evident that the market was moving, and we were making the call as well ourselves. About half an hour, if I recall. I can't promise that's true, but about half an hour to an hour before the TV networks were willing to make that call. And if you recall, the price action on that night, it was massive. It was a huge election result. And the fact that Trump got control of both houses of Congress as well, at least the Republicans did, meant that the policy impulse from this new change of government was massive. The same thing happened in 2020, but election night was much, much slower to develop, and I'll talk about that. And we did not know about control of Congress, which again is so critical for a president and its party to make policy, to make anything happen. We didn't know that until the Georgia runoff in January 5th, the day before the Capitol riots. Speaking to this slide here, this is me, this is an introduction. We'll talk about the election today, who will win, and some of the impacts based on different scenarios. And it's, as I said in my introduction, it really is important to know who is going, not only who is going to win, but this control of Congress. That is where the big market reaction is if you have both control of the presidency and both houses of Congress. Very brief disclaimer, this anything I say here is not meant to be seen as a trade recommendation. These are only my thoughts and on my personal thoughts on where this election could head. And so please don't take anything as a direct trading recommendation. All right, very briefly. So what was the big surprise in the last two election cycles? The map on the left shows you the partisan or party shift among voters from 2012 to 2016. As you can see from that very big area of very red behavior here, this was about the big Trump shift among white voters, especially in the Midwest, a massive shift relative to the prior election. These were areas thought to be safe for Democrats. Hillary Clinton did not even campaign there, and that was the big shocker. The overall polls in the national polling were actually very accurate in 2016, but they did not pick up what was going on in these specific states. And it sounds like in your introduction that you were explaining, Clement and company, how the electoral college system works. So you know that Trump could lose the popular vote, but win the election. Now, if we switch to 2020 election here, we see the partisan shifts. And we know that Biden won this election, so you see a lot of blue around this chart, but you can see some very interesting things like the big shift on the border. These are Hispanic voters that were moving against the Democrats. They liked the message on immigration, even though they themselves were Hispanic. Also, similarly, Florida is no longer a swing state. That's what 2020 told us. Florida, the biggest swing state prize of so many elections, suddenly no longer a swing state. This is now Republican territory. And same with Ohio, used to be a swing state. Suddenly also this has become a solid Republican state. But some new things developed as we went forward to 2020. And yeah, so 2020 election, we had this outcome. This was the actual picture on election night. So it looks like a solid victory for the Democrats, 306 to 232 on the Electoral College. Biden won by over 7%. Over 4.5% on the popular vote. 7 million. That's where the 7 came from. 7 million, over 4.5%. But look at this little factoid here. Just a few tens of thousands of votes in 3 key states were the difference in this election. 3/100ths, less than 3/100ths of the popular vote. Had those few tens of thousands swung to Trump, you could have had Trump winning despite that massive loss in the popular vote. This time around, we have swing states that are as follows. We really only need to track the results in these 7 states, and you can see the electoral totals for each. And the winner has to have 270 to win, hence the 270 to win website. This would be if sort of some of the noise you're getting from the market and some of the consensus among some commentators that Trump is getting a huge head of steam here in the popular vote, and there's likely to be a Republican sweep. This is sort of the maximum case for what Trump can do. If he wins all 7 of these swing states, you would see a result like this. And it would likely also mean that Trump gets the control of the Congress, both the Senate and the House of Representatives. I'm not saying I believe in this, but just to sort of point out how strong a victory that would be if he does get all of the swing states. By contrast, the minimal case, if we're to believe that the swing states sort of split both ways, the very minimal case for the Democrats is that they simply have to take these 3 Midwest states that they won, or that Biden won also in 2020. And you can see the margin of victory would be absolutely tiny, by 1 single vote. That brings up what the Hill calls the catastrophic scenario. What if we have a tie in the Electoral College? Theoretically possible, at least 4 different ways that are plausible. This would be a real nightmare, because I think you could see some sort of almost constitutional crisis, because if there is a tie, each state gets 1 vote to determine who is president. That would mean that, for example, Wyoming and its 600,000 people would be getting the same amount of votes as California and its 39 million people. All right, enough about that. So what are the odds makers saying? What are the betting odds saying? Well, it looks very, very skewed if you look at where you can actually place real money on a bet for who is going to become president. 66% to Trump, 34% to Kamala. And you can see the amounts that are being wagered here. This is north of $2 billion in total being bet. And then subdivided into not only who wins, but do they get control of Congress? And there are 4 sort of plausible scenarios. We get what's called Trump 2.0, which means Trump with control of Congress, supposedly at 48% odds, Harris and Trump, but without control of both houses of Congress, a bit less. And a Democratic sweep is considered very unlikely given how much the polls continue to move in Trump's favor as we get close to Election Day. One of the reasons these odds, I think, are favoring Trump so heavily is that we think that we've learned the lessons from 2016 and in 2020, when we overestimated the Democrats' chances and underestimated the chances for the Republicans. Here you can see the final sort of aggregation of the national polls for the popular vote showed Joe Biden winning by 8.5%. And we know the reality was only 4.5%. So were the polls off, or were some Democratic voters just not motivated to get out and vote? I think probably both were a key there. But if we look actually at the most recent election, it's not 2020, it's 2022, when we had a midterm election, not for president, but for some parts of Senate and all of the House of Representatives. And we saw there that the polls were off, but they were off in the opposite direction. They were too much in favor of the Republicans. So this 538 who does these voting poll aggregation and makes these predictions. They thought solid control of the House was likely, and in the Senate, they thought that the Republicans would win the Senate. What happened in reality? Well, the Republicans did take this House, but it was by a very slim majority, and the Democrats they increased their majority in the Senate. They didn't lose it at all. Certainly not expected. I think the one issue that gave the Democrats this result was something very unique, and that was the abortion issue after the Supreme Court had overturned the right at a federal level to guarantee a woman's right to the abortion. So many people came out to vote that were not voters before. So a few key points as you look towards election night and we try to figure out what the heck is going on. I am very undecided on what is going to happen. I think this is going to be a very close election. I also think that the polls may be wrong because we may have a surprising number of voters turning out that haven't turned out before. And the reason on the right that I circle that area is the young voters. Young voters, very much unlike Western Europe and Bulgaria for that matter as well, and Eastern Europe as well, the demographics in the US are very different. The largest generation is basically 30-something. Even late 20-something to early 30-something in the US. And you can see how they turned out more in the 2020 election than in 2016, but they generally turn out less than older voters do. But if we get more people that are motivated to vote among young people, they're a bigger population. So that's where the pollsters, the polling people have a hard time determining who will turn out. And you can see from up here, this is in 2023, so fairly recent. The younger you are, the more you tend to lean. Sorry, I'll show you what I'm talking about here. So this chart up here, the younger you are, so these populations up here, the youngest, and these are the oldest. You get more Republican as you get older, and you tend to be more Democratic when you're younger. Another thing that has happened is pollsters have actually changed their methodologies. They know that they got things wrong in the past, and they're trying to correct it, but have they overcorrected or have they brought new error risks into the methodologies? We'll find out. We have not really fully election tested their new methodologies. I've already made the point of voter turnout and polls being wrong, the next 2 points. But what about if polls are totally correct? Well, yes, if they are correct, if Trump is losing only a little bit in the popular vote, he is likely to win the presidency because of the Electoral College. But I think the Trump gridlock scenario is possible and very different from Trump 2.0. I'll go through why. I also think the market is not recognizing the risks of a Trump gridlock versus Trump 2.0. And then there's a scenario that I discussed below. There could be a very long period where we don't know who wins because there's a lot of struggle to contest the election. There would be reasons for both sides to do that. I won't get into that because I'm going to end up taking too much time getting through the rest of what I want to talk about today. So I do think there is a lot of risk for an extended uncertainty. And if anybody's interested, we could drill into what that might look like. Very briefly, on election night, what should you look for? These are when all the polls close. I put in a little strip here of the times for Bulgarian observers. The biggest one where you can start to get a sense of what's going on live is Florida, which counts its votes very nice and quickly. Unfortunately, they count votes in different order. That's what you saw in 2020. It was very confusing on election night because Trump told people voting by mail is fraud. You should go to and vote in person. And many, many Democrats voted by mail. So it starts off when they start the count. The Democrats look incredibly good at the beginning of the night, and then it was like this as the night wore on. In other states, it was the opposite. It was very confusing, and it was like it was just almost like a tease for all these conspiracy theorists because it looked so suspicious the way that vote change was changing as the night developed, this way in that state and the other way in other states. So be very wary and listen to some of the experts on this live coverage to get some sense of, we need to wait before we know exactly what is going on here. All right, now election outcome, the election outcomes themselves. and where the impact will be, both positive and negative. Now, a Trump sweep, I think this 48% odds looks a bit high to me, but I could be wrong, of course, and it could be an overwhelming victory for Trump. Regardless, we need to say, okay, if Trump does win and the Republicans get control of Congress, what will it look like? Well, with that control of Congress, that means they have control of tax policy and spending policy. And they will look for further corporate tax cuts. They've promised to cut the rate from 15% to 21%. And the other tax cuts from the prior Trump administration will be made permanent. Some of those will expire in late 2025 unless a new deal is cut, but not the corporate tax cuts. Those are permanent, currently at 21%, but the new would be for 15%. Positive, this will be good for all companies, but especially U.S. small caps. Small caps are more U.S. focused in their markets, so there's more of an impact than on the broader U.S. market. It could be negative for U.S. Treasuries because as I'll discuss in a moment, the deficits are already massive, and if you're, as he showed in the first Trump administration, if you're cutting taxes but you're not, creating new ways to cut the spending, then your budget deficit just grows and grows, and there are big risks around that. The other big policy promise is for tariffs. Now, tariffs, and especially against China. Now, what we've seen from tariffs is, as I note here, that this trans-shipping area becomes something that sort of offsets what would be the negative impact of tariffs. Trans-shipping meaning, well, we won't let China export things to us, so we export it to, they export to Vietnam, and then Vietnam assembles a few things, and then Vietnam sends it to the U.S. Or we boycott Russia, but then the trade with Georgia and Kazakhstan and Turkey, increases by 150%. So there will inevitably be that kind of offset, which does dampen the impact. But if he does get his way, and the Republicans do get their way and make broad tariffs, this is a huge risk for prices, so for inflation, and for economic growth. That's the negative side. And there are very few positives here in the short and medium term. But there could be some U.S. companies that you could pick out that would enjoy the protection of these tariffs. U.S. steel companies, other materials producers that chiefly have a domestic market, some of the U.S. auto companies, construction companies, because you have to build up that manufacturing capacity within the U.S. borders, etc. Geopolitics, the least ability probably to determine anything, but where the president has the most power. Of course, Trump very loudly and firmly anti-China. We think he would do everything he can to stop the Ukraine-Russia war. No idea if he could succeed, but he certainly is against supporting it. Therefore, something needs to happen there. And he is less in favor of the NATO alliance and the generosity from the U.S. point of view. He believes in paying for NATO. What does this mean for different sectors? We think it's positive for European defense stocks. The European need to have a solid and real defense force, which it totally lacks at this time, depending too much on the U.S. security umbrella. That could be positive for the German industrial core if it realigns towards military spending. But for now, Germany is looking like a disaster. What would it be negative for? Well, there could be a backlash for American brands from Trump's persona. I'm thinking a little bit of Tesla here because Elon Musk has gone 100% in as a Trump supporter. But other American brands and the American image in general may suffer at the margin for this. On the currency side, the Chinese currency, the yuan, the Mexican peso, the Japanese yen, even the euro possibly as well, as tariffs are very as both all of the above are very positive for the dollar. Rising U.S. rates, supply side tax cuts, and tariffs. He's also, Trump, very much for deregulation. That would be positive for banks, for U.S. automakers, for fossil fuel companies, supposedly also for crypto, although I won't go into that, and negative for the green policy companies and those that have been supported by Biden's fiscal policy. He calls it the new green scam, et cetera, et cetera. Overall assessment, we think this is quite possibly the most immediately inflationary outcome on rising U.S. yields and on the tariffs. There could be, however, people remember back to 2016, that remember how positive Trump was for equities, and they may try to put on that trade. I just think we're coming from a very different place in the stock market than we were back then. So I question whether any scenario can really pump up the stock market more than it already has been pumped up of late. I could be wrong, but I think any rally in equities could be quite short-lived. We know that a Trump 2.0 could also risk much higher bond yields, which tends to, at some point, put a lid on equities. The dollar would rise as a first mover under a Trump 2.0. Eventually, we would see Trump possibly interfering with the Fed. Overall, very gold supportive in a Trump 2.0. We see the risk of much higher inflation, and actually, a lot of this could be short-circuited if instead of just doing the tariffs, that Trump sits down with Xi Jinping and China, and they hash out some kind of deal where they get actually the dollar to devalue slightly, which makes U.S. manufactured goods more competitive. That is not a scenario that is a prediction. That is a scenario that's the kind of attitude and volatility and unknown, that dark horse, if you will, scenario that Trump could bring. I'm going on a bit long here, so I think I may have to rush a little bit through the rest of the slides, but I really wanted to get to this Trump 2.0 to describe some of the impacts. One thing to watch for on the political side is so-called Schedule F. The idea here was it's something he started in his first administration, but did not put through. It is in this so-called Project 2025 manifesto, this conservative agenda to politicize many of the bureaucrats in Washington. Tens of thousands of bureaucrats suddenly becoming political appointees, and it would really supercharge the political friction and energy and controversy in the U.S. This one's kind of easy. So what if Harris actually wins? This was until the last few weeks quite a close runner-up to the Trump or the Republican sweep scenario. It's slipped a lot in the odds because her polling has been worsening quite consistently. But this is fairly easy. I mean, this is basically what we have now. It just have Harris instead of Biden, and we have a mixed Congress, just like we did before. But probably the Senate will go Republican, whereas the House might stay Democratic. So we don't need to really use our imagination here. We just have to question whether we get into trouble with these budget ceilings and the government shutdown, and of course what happens in the existing very hot topics like the Ukraine-Russia war and the wherever the U.S. is in its economic cycle, because under this scenario, the president doesn't get anything done. The president can only do foreign policy, really. So this is probably the least volatility scenario, the most status quo scenario, and probably one of the least inflationary scenarios. That's the bottom line here. The other ones that I want to pull out here, I think the top one here, a Democratic sweep, would be a real shocker now because of where the market is and where the narrative is going into this election. It would be very negative, probably, and very immediately so for global equities, just like a big sell-off, just to sort of readjust to this sudden reality. Because it promises higher taxes for corporates, so the opposite reaction in the stock market, because the Democrats have said they want to raise that corporate tax rate about half of the way back to where Trump cut it. So they want to raise it from 21 to 28%. And then other initiatives, if we look at massive support for home building and home buying, so that keeps inflation high, fiscal spending high. We look at things like the recession risk might be lower because of all that new spending that comes in. And it supports the green sectors more. At the margin, it supports fossil fuel companies less, although I don't really think, having seen Biden administration, I don't think there's a big threat out there to these traditional fossil fuel companies. Bottom line, far less drama than Trump sweep, but some drama, and it's also inflationary. It also probably means the Fed doesn't cut very much, and it probably keeps U.S. Treasury yields higher than under the gridlock scenarios. And that brings me to this scenario, which I think is the most underappreciated in terms of the risk, and that would be what we call the Trump gridlock scenario. Trump wins. He gets the Republicans in the Senate. By the way, the Senate, it's almost impossible for the Democrats to get, but the House could go to the Democrats. I think this 12% looks a bit low if the polls are accurate. What does it look like in terms of the market fallout? Well, no Trump tax cuts. That's not going to happen. The House, the Democratic House, won't have it. And we won't get the fiscal agenda of Harris. But we do get the question mark, will the tax cuts from the first Trump administration be continued late next year? And as well, do we get all this sort of standoff, dysfunction around budget ceilings, government shutdown, etc.? I think it's a higher recession risk scenario because Trump will probably still try to do his tariffs, which are growth negative. So we get the sort of the market negative part of Trump without getting the market positive part of Trump in a Trump gridlock scenario. So that's one to watch out for on election night and in the days that follow. We also need to figure out where we are in the U.S. Growth cycle. A very complicated chart here. I won't get into it too much, but a classic sign, something that classically precedes a recession, is an inverted yield curve. Inverted yield curves are shown here in red. It's what happened before the Great Recession in 2008, back in 2001, back in 1990, and now. And we had a very inverted yield curve this time, the most since the 1980s. So many are calling for a recession. Or is this just some kind of traumatic renormalization adjustment that needed to be made after that crazy, crazy pandemic stimulus? That is the question. But right now, the market is not at all set up for just a normal recession. They're thinking either a soft landing or no landing. So that would be quite a shock to markets if we do get a standard basic recession. One thing that is clear and one thing that we're convinced of, that there is no political party for balancing the budget. This is a danger for U.S. Treasuries. So owning bonds is very difficult to do. As long as governments continue to spend like this, we are going to see inflation at we're in a new inflationary regime. Whether it's the Trump tax cuts that were crazy because he cuts taxes at a time when there was no recession, or whether Biden's fiscal stimulus was crazy because it was way over the top and aggravated inflation levels that were getting higher during the pandemic and in the short 6 months to the year after the pandemic was winding down. A complicated topic here, but there's a lot of controversy around the Fed's big cut. Are they being political? Why did they cut so much if the U.S. economy is doing well? I think the U.S. economy is doing well for some people and not for others. I think they're right to worry about parts of the labor market. But the other question is, are they simply doing it because the U.S. can't afford to service its debt? And I think that is a very valid question and a big determinant of what happens with Fed policy. The Fed is on the path to increasingly lose its independence. It will have to simply keep the U.S. Treasury market orderly, and it will have to make sure that the Fed funds rate, so U.S. interest rates, are lower at all times than U.S. nominal GDP growth. It has to do so because the U.S. cannot afford to pay down its debt, to pay for its deficits in real terms. And you can see the cost of servicing debt in the U.S. This is how much of government payments are going to tax receipts. Here on this chart is vaulting sharply higher. And if we don't see the U.S. lower its interest rates, it's going to be getting back to the historic highs as a percentage of the budget back in the 80s and early 90s when Clinton was dealing with that. All right, asset allocation. What do we do in this crazy world? We don't know the outcome of the election. What should we do? Well, our longer-term conviction is that stocks are a foundational part of every portfolio. That goes without saying. It's just that we're at a very, very difficult starting point for stocks in real terms. And what we mean by that is something like 7 valuation metrics. You can see here on the right, this chart, how expensive are stocks? Well, they're close to the most expensive levels they've ever been at. So it doesn't mean that stocks are going to go down in nominal terms. It just means this is a potentially very lousy starting point compared to something like 2009, which was a very nice starting point in terms of valuation metrics. But you can see how stocks have done in total return over the years, over the last 20 years, 10% per annum. You can see how long-term U.S. Treasuries have done over the same time frame. Almost all of that, of course, was before this inflationary outburst, 3.8%. And you can see how gold, this is the only way I could track it in Bloomberg's terms, was using an ETF, has returned about 9% per year. And about almost 500% over the last 20 years if you just take the price of gold bullion. Pretty damn impressive. And we think, given that we're going into a new era of what some call fiscal dominance, so the government spending, providing so much of the impetus and the sort of the animal forces in the economy, more than monetary policy, that gold needs to be a sort of a cornerstone, or at least some decent portion of portfolio. And you take that gold allocation from your bonds and not from your stocks so much. Other assets have some cash available for optionality if there's a correction in the market, commodities and hard assets relative to the standard portfolio, and again, underweight bonds. And just for some food for thought, there's some other big picture mega trends that we think are going to continue for many years to come, and we need to think of their impacts.